Good morning, everybody, and this is your S&P 500 day trade setups for today. So a couple of things on the go here. I know we've been talking about a potential wedge, but there is also this channel, and then obviously if we start running a line along the top there, we get a wedge. So a bit of a gap down this morning. I think what we're going to do is actually ignore all of that until something starts happening. So first things first, we have a crossover the moving averages. We are above the 155 on the 8 hour. I do have a bit of a crossover and separated relatively far, pointing up. So we have broken through the high that we had here, and if you just look, it's been 3 weeks in a row where we've had a series of higher highs and higher lows. So at the moment, this level that we have here, look to the left, you can see the interaction here. Important to realize that we do have a weekly close above the 155, and look at the oscillators, grouping very nicely for some kind of a move to the upside. But the one that is really sort of interesting me at the moment is the monthly. Today is the last day of the month, and look at this, could end up being a massive engulfing bar. What I do want to do is just put that monthly close. See this monthly close here? I just want to get that on the charts. If you look left, you'll see there's some interaction with that as well. So let's just get down to today's levels for what we're looking for. Friday was pretty much a solid run into the close, which gave us a fairly strong weekly bar. And if you look at the 3 hour, bit of a pullback, then some consolidation before rallying, and all of this while tech stocks were getting hit. So very interesting that we have, obviously there are other stocks in the S&P 500 which are carrying this at the moment, and not all of it is tech stocks, although the tech stocks did bounce on Friday. But the way that we're holding our head above water without the tech stocks is very interesting to me right now. Right. 1 hour is the one that we're looking for. We have a few problems on this chart. The first one is this gap here, and then you can see we've kind of just gone straight up off the 155. Now again, look to the left, but there was a little bit of structure here. If you look at that, I was expecting it just to hover down here, to be honest, being a Friday, but that's what happens when you're not watching the charts, and we had a pretty solid break to the upside. So there's a couple of areas that we could be looking to buy off, and I'm just going to give you 3 levels, and I just want to get down to 15-minute just to double check something. So we've had a gap down this morning. Oscillators are all over the place. This area here could very well offer support, and so could something like that, a little bit further down. Okay, so what we're looking for is ideally a pullback to 38.58. Pullback to there, we get price action at that level we're looking to buy. Alternatively, we're looking at 38.67 and then this 38.77, and you need to pay attention to 38.91 or 92 as well. So that is, well, hang on, let's just bring that down exact. And that gives us 38.90. So that's kind of the view that I've got at the moment. We have a pretty solid trend that has formed on the hour. We're a little bit overbought at the moment, so I would expect us to sort of drift lower or even just drift sideways while this happens. We do have noise coming out this week, and obviously we've got non-farm payrolls later this week on Friday. So it could be a case of volatility, but I think we're going to be driven by whatever results are coming through this week. So for me, trend is currently up. You can see this was a decent deep pullback here, just off the back of some of the tech stocks results, and Amazon was the culprit here. So Meta and Amazon actually, which were the culprit sort of in the week, in the week last week, and this week we've still got quite a bit of earnings to come through. But I still think pull back into this area is going to offer some area of support. You can see it's a zone of resistance, which we have broken above. So I wouldn't be too surprised to see us find support here and then stretch up for 39.46, 39.50. Obviously 3900, which is where we are now, needs to give way. And lastly, that is something else that you would need to pay attention to. So you can see price closes the gap, comes back and finds support in this area at 3900, then you have a fairly strong opportunity to the upside. But we do have a weekly close above 3900, so my view at the moment is more than likely a little bit more structure, and then we should be hitting 3950 and then aiming for that 4000 again. So that's kind of my view at the moment. It's looking really interesting on all the time frames. We do have this wedge still in play, but I think we're still stretching for this level. Getting above 39.46 or 39.50, that's going to be the interesting one, because I think that will get us a complete crossover, and then we'll be looking for support somewhere along the line. But on the 8 hour, you can see the importance of these levels I've just given you. Okay, so yeah, be careful. Watch this on the 15-minute chart. Don't go and try and just jump in for the sake of jumping in. Let the oscillators ease off, let them get grouping to the downside, and then wait for price action. Inside bars, engulfing bars, or pin bars, off structure, entry above that structure, stop right below those that pattern that has formed on price action. And then you're looking, if gap hasn't closed, you're looking for gap close first. Then you see a pullback back onto one of these structures, and then you'd see another move back up to 39.46. Hope that helps, and we'll catch up with you tomorrow morning. Cheers for now.